I am Linwood Bibbins, CEO of Reach TV, and you're watching Taking Stock.
Despite better news than expected on the labor front earlier this morning, we are for the third consecutive day here on Wall Street seeing losses here not quite accelerate into the close. We are expected to finish the tail of the tape off our session lows, which really peaked to trough, fell at its lowest point around the 2 o'clock hour. But a lot of questions remain for investors across the major market indexes. What is the state of the AI play? How about record high valuations? There are geopolitical and military concerns with regards to NATO and Russia. All of this sets the stage not only for tomorrow morning's crucial must-watch August PCE inflation print, but it also sets the stage for the show today. Welcome to the show. This is Taking Stock. I'm your host, JD Durkin. We are just moments away from the ringing of the iconic closing bell right here at the New York Stock Exchange. And ever since a few days ago, Jerome Powell talked about how he felt like maybe equities were a little too highly valued. We started to have selling, that selling continuing into yesterday's session here on Wall Street, and that has been the tail of the tape as well here today on this mini Friday, as I like to call it, also known as Thursday. We are expecting the S&P 500 to finish down about 0.4%. This despite the fact that we had that initial jobless claims number today of only 218,000. Maybe once again, good news, kind of bad news for the market. Peter Tuchman, the Einstein of Wall Street, is on deck. We'll get his perspective on the day's price action and volume and much more. But for now, the team from Tetra, ticker symbol TTI, here at the New York Stock Exchange, set to do the honors for the closing bell. There we go. There's the three gavels and the tail of the tape as expected on this Friday Eve. Not exactly maybe what a lot of market participants had hoped for, but we are seeing downward pressure now for a third consecutive session here on Wall Street. The S&P 500 finishing down evenly 0.5%. The Dow 30 down about 0.3. The New York Stock Exchange Composite down 0.7%, while the small caps, once again, just like yesterday, bearing the brunt of the worst of the off rotation. Small caps down about a full percent. I say this a lot for our guests, but this is really the only person I really mean it for. Who do I want to talk to more than anyone else? My very good friend, the dear one and only Peter Tuchman, the Einstein of Wall Street, senior floor trader here at TradeMoss. My man, thank you for being here.
It's a pleasure.
I feel like since Powell started talking a couple days ago, investors not super thrilled with what they heard. Another day of selling. What'd you see in the markets today?
You know, it's hard to know whether that's what the impetus of this is or the catalyst of what it is. You know, we know we've been trading at record highs, sort of flatlining over at these levels for a while, right? We know that markets go up until they no longer go up and come in a little bit. I would have thought we would have had much bigger pullback by now, just gauging from the temperament, the end of the month. You know, you've got that wonderful sell on Rosh Hashanah, buy on Yom Kippur trade, which is working beautifully this year. So, you know, the big guy's probably in charge, we know that. But besides that, all the economic data is painting a picture of a weaker economy. And so this is where you just brought it up. The bad news is good news as far as more interest rates and whether they will accelerate that scheduling going forward. Whether we get one in October, November, and December, it's possible. We could get another as we did last year. We ended up with 100 basis points from September till the end of the year. You know, today was a very stock-sensitive day, right? We know that Apple was leading, Tesla was lagging. You know, you had a number of intraday reversals that were very significant. You had a number of names that had been beaten up a lot in the Mag 7, like Palantir. At one point, you know, it had been beaten down, and it was almost sort of like a capitulation, because at the low of the day, it was down 4, and then it ended up rallying up 12 points, right, from its lows. So there was a lot of very specific stock-sensitive things, where almost like the, you know, we know that there's a lot of money on the sidelines. We know that people are, you know, with sort of determination buying, you know, things. They're not letting the market just come in, right? We obviously see that. Today kind of felt like, you know what, if the buyer stepped away, the market would come in a bit more than it did, but we know that there's a lot of catch-up to be played by some of the bigger guys coming into the end of the quarter. Then there's the other side of the coin, which would be, you know, when markets are up at the end of a quarter, you either see what's called window dressing or you see profit taking.
Yeah.
This month, we don't need, this quarter, we don't need window dressing. The market did that all on its own. based on just enthusiasm. So right now, I think you're seeing a little bit of rotation. If you look at the advances versus declines, it's a fascinating index to watch. Now, it's not an index, but it's a bit of data to watch, because you'll get a sense. If they're just selling the market, then you'll see a 3 to 4 to 1 declines versus advances. What we're seeing, whether the market goes up or down, is basically a 50-50. That means that it's clearly rotational. The last thing I'll say that's fascinating is that the VIX, which normally trades inversely to the market, when markets go down, VIX go up, right, and the other way around, we're not seeing that at all. Basically, when the market was going up, it was going up. And today, even with the pressure that the market had on it, the VIX was not going VIX was not going up.
Yeah.
So we're sort of in a weird, it's a little bit of a weird vibe, but we'll figure it out.
Yeah, we saw the VIX go up about 5 basis points today in the session, not quite back to that 17 level. You and I talk a lot about, I think you call him Jay Powell, and the Fed.
Yes.
The Fed is very data dependent. Tomorrow we get PCE inflation print. We get a huge jobs print next Friday. What are those data point catalysts you'll be paying attention to give you some sense of how equities perform from here?
Well, all of it, right. I know we also saw they redid the GDP number, right, significantly. Like we had gone from 3 to 2.8 to 3, and then they actually revised it up to 3.4. So we're starting to see the impact of tariffs on the marketplace in some good ways and some bad ways. And we're seeing who's taking the brunt of that. And you're going to notice that by the Jobless thing. I also we're starting to see the fact that once you start cutting interest rates, you're in a cycle, right? We know that. I think we talked about it. No, it was me and Tim who said that in an interest rate cutting cycle, which we are now in the beginning of, historically, for the 12 months that we're in that cycle, the market has historically been up 16%.
Sure.
So there's a lot of market data, historic data, that is showing us that at the other end of the horizon, things will be positive. This is a slight minor pullback in any way. We've been trading at, we've had as many as 29 record closes in 2025 in a year that's showed us everything. We've seen the high highs, the low lows, wars, tariffs. We've seen it all in 2025.
Yeah.
Yet we're trading at these amazing valuations.
Third consecutive day in negative territory. We'll see what the tail of the tape is tomorrow after that PCE print. Peter Tuchman, thank you for joining me as always.
All eyes are on that, and you, my man, you are the best.
My man, you are the best. Right
Happy
back at you.
trading,
Josh, I'm going to hand you that. And Todd, you and I are going to go for a walk. We're going to barge right through the group. Pardon me, everybody. We're going to come through and we're going to talk about the dollar index and the 10-year treasury yield, because that's what market nerds like myself like to talk about. Pardon me, folks, we're going to take a look at the screen above you. I don't want to be in your way here. Todd, we're going to take a look at these two indicators in green territory. That is the dollar index and the 10-year treasury yield, historically linked. Whenever we see that 10-year climb on the session, like it did today, a couple basis points, you tend to see the dollar strengthen with it as well. Gives us a signal on the day that global money is ever so gently leaning into U.S. assets. On a day like today, it actually puts downward pressure on stocks, but I would argue it kind of reinforces that broader U.S. safe haven demand, and that brings us perfectly and tees us up perfectly, I would argue, for another name. Speaking of stocks, downward pressure, Tower, we're going to take a look here at shares of Oracle on the day, down 5.5%, despite being up more than 70% year to day for the enterprise software giant. It just hit its all-time high a week ago of 345. Since then, down 15%. A new firm initiating coverage with a sell rating on it today, despite the presumed positive news with regards to TikTok. That now has a market cap of more than $830 billion. It started the year all the way down at 460. Explosive growth so far for Oracle. And Todd, that brings us now to an ETF Oracle's a big part of, and that's ticker symbol XLK. Comes from our friends at State Street Spider Select. Down fractionally here on the day. Oracle is the 5th most weighted name in this particular ETF at 4%. Kind of pales in comparison, I would argue, to the strength of NVIDIA and Microsoft's combined 27%, but gives you a tail of the tape, gives you a sense that as Oracle's moving, so too go a lot of the other big technology names that are crucial to these stock markets. All right, earlier this week, our very own Ashley Mastronardi caught up with Edward Woodford. He is the founder and CEO at Zero Hash. Here now is Ashley's interview. Take a look.
Zero Hash, a company that powers crypto and stablecoin payments, just received a $104 million round of funding, bumping them to unicorn status with a valuation of $1 billion. Joining me now is Edward Woodford. He's the co-founder and CEO of Zero Hash. Edward, welcome to NYSE Live.
Yeah, thanks for having me.
Congratulations on this recent round of funding and becoming a unicorn. How do you plan to allocate the additional capital?
Yeah, so we really have three parts of our business: crypto, stablecoins, and tokenization. So our goal is to expand all three of those. We're a team of about 200 people, so some part of the capital will go to scale the company and really just lean into kind of the massive momentum that we see in the space and globally. We're a global business headquartered in the US, and there's obviously a lot of great macro momentum here, a lot of great macro momentum in the EU and other regions, so really lean into this momentum to capitalize on what has so far been an 8-year journey for us.
All right, and you are a crypto as a service platform. For someone who's new to the crypto space and might just be learning it, what does that mean in plain language?
Yeah, so we're an infrastructure provider. So in plain language, what we allow is groups like Interactive Brokers to launch crypto natively to their customers. So if, for example, you're an Interactive Brokers client today and you want to allocate a portion of your portfolio to crypto, you can do so. And Zero Hash makes it very easy for groups to easily embed crypto within their offering. Yesterday, we announced that Morgan Stanley also participated in our round, and Morgan Stanley also concurrently announced that their E-Trade platform will be launching crypto in Q1 of next year alongside Zero Hash. So that's a great example of implementations of very, very large and sophisticated brokerage firms having demand from their customers for crypto, and Zero Hash allows them to get to market seamlessly, easily, and continue to innovate in a very trusted way.
Of course, and Morgan Stanley is an NYSE listed company, I just have to mention. But seeing like a traditional bank move more into crypto, what do you think that means for crypto?
Yeah, I mean, I think it's huge for the space. I think, fundamentally, these banks, I think, view this as a technology. And of course, they're going to market first with the asset class underpinning this technology. But the conversation is much broader with these banks. I think every bank will launch crypto within their infrastructure within the next 6 to 12 months. And then there's a lot of exploration with our partners today already around what is their strategy around stablecoins, what is their strategy around tokenization. So it's kind of odd to say that for crypto, for banks, it's kind of vanilla at this point. The leadership team have made a decision, let's move into crypto, and then how else can this technology be applied and disrupt potentially the broader set of our business. So for me, my thesis is every bank will offer crypto within the next 6 to 12 months, and within the next 3 years, every bank will have tokenized a meaningful portion of their balance sheet.
Do you think crypto is making a move onto the world stage? We had Circle, we had Bullish IPO here at the New York Stock Exchange. Where do you see crypto in the next 5 years?
Yeah, so I mean, fundamentally, I view crypto as a technology. And so I believe that, of course, there's these crypto stablecoin specific companies like Circle and Bullish and ones that you mentioned. But my belief is that every business will adopt crypto, the technology, blockchain technology, as part of their fundamental stack. So I actually believe that every NYSE company will actually be embedding this within their infrastructure. And I think that adoption really comes when we stop talking about this as a technology, in the same way that every single NYSE company is internet enabled. I think every single company will effectively be blockchain enabled, and it will abstract away that complexity, and it will just be used natively in the same way that we use computers and electronification of markets occurred. Same thing's going to happen here.
All right. Thank you so much, Edward Woodford from Zero Hash. Thank you so much for joining us at the New York Stock Exchange.
Great to be here.
Welcome back to the broadcast, one and all. This is Taking Stock. We're still down here on the trading floor of the New York Stock Exchange. Before we get to our next guest, we want to bring you a few fintech, crypto, and AI-related headlines on your Trading Thursday. First up, if you're following the price action of the crypto majors, maybe a good day not to check your portfolios. A comparable story for ETH, Solana, and Bitcoin, all getting clobbered on the session. We chat about that with Peter Tuchman in the last block. Next up at this hour, Elon Musk's XAI has sued OpenAI. Yeah, that whole thing's still playing itself out. This time accusing the second company of stealing trade secrets by hiring former employees with knowledge of its chatbot Grok and data center plans. And finally at this hour, Databricks partnering with OpenAI to bring ChatGPT models directly into its cloud platform. It's a deal that's expected to generate more than $100 million and give it an edge in the enterprise AI race. All right, let's bring in Bo Kotecha, he's co-founder at Paxos Labs. He joins us down here on the trading floor of the New York Stock Exchange. Bo, grateful for your time. Thanks as always.
Thanks for having me on.
Tell our viewers a bit about the work you're doing at Paxos Labs, specifically through the lens of stablecoins. We're talking a lot more about them in today's landscape.
Totally, yeah. It's been really exciting to see all the action that stablecoins have gotten in the mainstream news cycle over the last few months. sense. So Paxos Labs is a newly incubated company out of Paxos, which has been operating as a regulated blockchain infrastructure provider for over a decade now. And really what we're focused on at Paxos Labs is, well, stablecoins are kind of the topic of the moment today, but what comes next? Every single platform in the world, we believe, is going to integrate stablecoins and digital assets. And beyond that, they're going to want to integrate financial services around that. That means lending, spending, borrowing, all the things that come after that. And so we really think stablecoins are the first innings, and there's a lot more to come after that, and that's what we're focused on at Paxos Labs.
As you take a look at those later innings, what does true institutional adoption of the broader stablecoin landscape look like to you? I feel like different people may envision it a little differently. So if we're in the early innings, first or second, tell me what the fourth or fifth inning looks like.
Totally. I mean, a lot of people forget that, we've got this $200 million market cap number with stablecoins today, but 95% of that is still sitting in crypto trading markets, right? If you think about some of the largest platforms in the world, the Charles Schwabs of the world, the Fidelities of the world, the JP Morgans, they hold hundreds of billions of dollars of cash on their balance sheets today. And so imagine when they start to adopt stablecoins, we're just in the very, very early innings, and we're looking at trillions of dollars of stablecoins in the next few years.
Talking about the global impact specifically, you think that the landscape of stablecoins can have on financial payments around the world. How can you envision this playing itself out on a global scale?
Yeah, totally. So, before my time in stablecoins, I worked at a traditional fintech. I worked at Square and Cash App, and so payments are very near and dear to my heart. The use case for stablecoins with payments is obvious. Faster settlement, cheaper movement, global movement. But beyond that, I think there is a lot of interesting things that you can do with stablecoins. And again, it's building the financial services around that. So the way I see it is, yes, spending comes first, but then it's earning, borrowing, lending, everything that can be built on stablecoins that I'm really excited to see get global adoption.
Bo, what is one reality about stablecoin adoption in your work at Paxos you would want more people to pay attention to?
Oh, man. So I think, a lot of people are exploring their stablecoin strategy, and it's kind of like the exciting thing to do is to say, hey, we are adding stablecoins to our platform. But there's a lot that goes into it, and that's really what Paxos and Paxos Labs focus on. It's providing regulated custody, the ability to move stablecoins, all the infrastructure that comes around actually integrating and supporting stablecoins on your platform is what we do, and we're here to help enterprises move into their stablecoin strategy today.
That's amazing to hear, Bo. One of my big goals as a financial journalist is to try and make my viewers a little bit smarter. People are always asking me, how do I become a smarter, a more informed investor? If someone wants to consider learning more about the broader stablecoin ecosystem, where do you most recommend that retail investor begins his or her journey?
Yeah, I think there's some great conferences, first of all, that people can go join. And Money 2020 is happening soon in Las Vegas, where there's going to be a huge stablecoin presence. But really a lot of things that we're doing at Paxos, we're doing blogs, we're doing YouTube videos. And so I think there's a lot of stuff that we can put out as educational material. To your point, there's a lot of demand for education on stablecoins. And so combination of Twitter, conferences, and some blogs that Paxos is planning to put out soon.
Bo Kotecha is the co-founder of Paxos Labs. Will you be out there in Vegas, by the way, Money 2020?
I'm planning on it, yeah. We'll see you there.
I'll be there as well. We'll be doing the show live from Vegas there in a couple weeks, so I hope you'll stop by the
Great.
show when we're out there in Vegas and
Definitely
Nevada. Great
will.
to have you on the show, Bo. All right, folks, coming up here, the latest on the worlds of startups, raises, and rounds, plus an interview you do not want to miss with Brady Murphy of Tetra Technologies, fresh off the Bell podium. More Taking Stock coming up after this. Welcome back to the broadcast, one and all. Today in the worlds of startups, raises, and rounds, news you could use. First up, Y Combinator is rewriting Silicon Valley's myth with a new early decision track that allows students to graduate first and build their startups later. That's interesting. Next up, AI startup Cohere just closing another fresh $100 million round, lifting its valuation to $7 billion. Also in the process, striking a partnership with AMD to run its models on rival chips to NVIDIA. And finally, stablecoin startup Bastion raising $14.6 million. That round led by Coinbase Ventures, with Sony, Samsung, and Andreessen Horowitz joining to back its platform. Time now for one of, without maybe my favorite part of the show, we get to talk with someone who actually just did the closing bell ceremonies. Brady Murphy is president and CEO at Tetra Technologies, who did the honors just a short time ago. Welcome to the New York Stock Exchange, Brady. It's great to have you here.
Yeah, thank you very much. It's an honor to be here.
Of course. First of all, can I get your perspective being up there, doing the bell? You got a great NYSE listed company. What was the experience like for you?
Yeah, no, it's just an important day for us, and it's been a long time since Tetra's been able to participate in the bell ringing. We were here about 8 years ago. It's the first time for me as a CEO, so it's an important day, and it's a day that we launched and communicated at our Investor Day, our One Tetra 2030 strategy. So a big day for us, not just ringing the bell, but able to get our Investor Day behind us. So
yeah, talk to me a bit more about that path to 230. What does that mean both for the company and for people who are investors in Tetra Technologies?
Yeah, so we've been around over 40 years as a company. We have a kind of a special secret sauce of the company, which is around fluid chemistry. We've been in the oilfield services space for a long time, but our 2030 strategy is really kind of diversifying and transforming the company from what we have been in the past to new and emerging markets to 2030, which is what we've laid out in the energy storage business, using our fluid chemistry for that, desalinating of produced water, which is a very important part of our industry right now. So really it was kind of laying out that path of, from what we look like today in 2025 to what we will look like in 2030, and it's a very transformative story.
I was saying to you before we came back live from break here that Tetra Technologies as a stock, ticker symbol TTI, you guys are knocking the cover off the ball year to date. You're up 50%. Talk to me first and foremost about what has been driving the success of the stock. And then I like to ask every CEO, do you follow the stock movement day by day, or have you learned at a certain point you can't check the highs and lows of it all too often?
No, of course we keep our eye on it. It's it's a scorecard that ultimately we measure ourselves by. Shareholder value is what we're here for, and we've got a great organization that rallies behind that. But yeah, so the story that we laid out today for 2030 is important for us, and we were really glad to get the message out. We've kind of been building some momentum behind our story since the start of the year, which I think has caught the investors' attention and helping us get that momentum.
What would you most want people to know about the space of water tech and battery storage solutions that you feel your company is uniquely positioned to address and really continue to be a leader in?
Yeah, I think our fluid chemistry expertise over the years, over 40 years, is what kind of put us in this position to be able to capitalize on that. So we've got some unique skills, some unique experiences that I think help us lead the way in both these innovative areas. And we're very proud of what we've done, but what we can do.
Yeah, it's been fascinating. Down here, we do the show every day, and we've been talking about this surge in energy stocks, and as part of this ongoing storyline of the big picture energy transition. As you look ahead to 2030, where do you most think, or really where do you hope your company is? What type of leader does it play in the ongoing energy transition conversation?
Yeah, so we've laid out our 2030 goals to more than double our revenue and more than triple our EBITDA and cash flows. So, a lot of that is on the back of the new initiatives, the new strategies that we've laid out. Energy storage is going to be a big part of that. We see long duration energy storage, which is where our niche is, in the electrolyte formulation as being critical for utility scale renewable energy type projects. So that's our sweet spot for that. And then on the desalination side, very important that we find a solution for the water problems that we're seeing now in the Permian Basin. And again, we feel we've got a leadership role in establishing that. So
very grateful for your time on the show. Congratulations on doing the closing bell here at the New York Stock Exchange. That is Brady Murphy. He is president and CEO of Tetra Technologies. Brady, thanks a lot.
Thanks a lot. Yeah,
great to have you here. Absolutely. Folks, don't go anywhere. After a quick break, the latest from Money 2020's own Scarlett Sieber. Don't go anywhere. Much more Taking Stock coming up after this.
welcome back. I am Scarlett Sieber from Money 2020, and on this segment of Back of the Napkin Math, we got some napkins, we got some other things, and some other things. So we're out here with lots of cool stuff. You know, we are sitting here at the beautiful, iconic New York Stock Exchange. And one of the things that we're going to do here, I have a guest with me in Zach Pettit from Money 2020 as well. And one of the things that we're going to do is I'm going to take a celebrity at random.
Okay.
You might know him, you might not. It is a him in this case.
Okay.
And we're going to do a fun little what if, you know, on the back of the napkin math. What if this celebrity was actually a company listed at the New York Stock Exchange? What would this celebrity's market cap and enterprise value be? That's the question for you.
Interesting. Okay.
So you've got 30 seconds to give me your thoughts.
Okay.
The celebrity is dun 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 Patrick Mahomes.
Okay.
30 seconds. Let's go. Market cap and enterprise value.
Okay. What's his net worth?
Net worth is 70 to 75 million.
70 to 75. Okay. That, for one, that feels low. But okay, so 70 to 75 million. Think about the brand of Patrick Mahomes. Like, there's a... Like, when you're
think about that brand.
When you're thinking about the multiple of it, like, one, he's returning capital on top of the cash. He has like 95% returns or something like that. Because Kansas City happens to be a wealth management capital of the world, but we'll just breeze by that. I think 70 to 75, you include the brand, you think about Oakley, you think about State Farm, like he's the nice guy of the NFL. So I don't think he's going to trade it. Yeah, he's a family man, exactly. I don't think he's going to trade it like a 20 times multiple because he's far enough into his career. But you could give him at least a 10 times multiple.
I was quite intrigued with what you were saying, so I let you go over time. But okay, so what you're giving him 10 times, so you're saying what?
I would go
value?
700 to 800 million, 750, something like that.
Okay, well with that, Patrick Mahomes out here at 750, not quite a Billy, but we getting up there. All right, if there's anyone that you would want to know about who we think their market cap would be, their enterprise value, then go ahead and leave it in the comments below. That is all for this week. Until next time.
Welcome back to the show. Before we let you go, we'll give you a quick look at what investors had in store across the major market indexes on this Thursday. As a reminder, we did see that big surge in energy shares. We were just talking about it with Brady Murphy right before the break. The lagging sectors in the S&P 500 today include healthcare, cyclicals, and defensives. We don't frequently have consumer discretionary and defensives both down on the day. That was the tail of the tape. Tomorrow on Wall Street, 8:30 a.m. August. PCE inflation print, that's the big one. 9 a.m. Kristen and Remy respectively count you down to the open for NYSE and FinTech TV. That's going to do it. This is Taking Stock, and we will see you tomorrow. Woo!